Hey team, Claire here from My Mortgage, and today I want to talk a little bit about break fees because I think that this is going to be something that might come up for people in the next 6 to 12 months as rates start to level off and potentially decrease in 2024. So for starters, what is a break fee? Well, actually it is called by the bank an ERA or an Early Repayment Adjustment, and essentially it's a fee that the bank can charge you to break a current fixed term. So for example, you might have fixed for 2 years this year, and you might want to break your fixed rate either to get a cheaper rate or to sell or to make some changes to your lending, and they might charge you a fee called an ERA or a break fee. So essentially the way that we kind of look at break fees in our space is a very high level estimate, which is that if the rates have gone down since the time that you fixed, then it's likely that there'll be a break fee of sorts, because what's happening there is that the bank can actually re-lend that money out that you're breaking the term of, but they have to lend it out at a cheaper rate, which means essentially that they're not making the money out of it that they expected to. So when you sign your original loan agreement with the bank, they go, cool, you're agreeing to pay this amount or this interest rate for a period of time, and if you break that contract with us, then we can charge you for it. In a nutshell, if rates go up, so if they're higher than the rate that you got when you first took out your lending, usually there's no break fee because the bank goes, sweet, we can actually lend out that money at a higher rate, so we're not going to charge you for that privilege. Overall though, break fees are actually calculated on the day of breaking. So if you're selling a property and that's 2 months away, we can't actually give you an exact break fee based on today because it might change in that time. What we normally do is get you an estimate to make sure that you've got enough information to make an informed decision, but we actually can't get that confirmed until sort of a week of settlement or just before. So something to really be looking out for at the moment when you're looking at fixing and looking at what terms to take is, what might my situation be in 6 or 12 months, and is there going to be a situation where I might have to break this rate? Because if the rates come down, then you could have to pay for it. So really important to be talking to an advisor about your situation and what might be coming up for you. And yep, unexpected things can happen, but it's always good to plan if you can. So if you're interested in talking to us about that, just reach out onto our website, mymortgage.co.nz, click on the Contact Us page, and you can actually book in a call directly with me or one of our awesome advisors to talk a bit more about your situation. Look forward to hearing from you soon.